Hey Scott, got this fixed last night. Not sure what it was, but we got it fixed. So I wanted to show basically what the three options were. First of all, just kind of wanted to highlight. I locked about 10 loans this morning. Kind of got to notice that this trend right here. So here, this is the mortgage-backed securities. It kind of the green means the value goes up on the. This is a 2.5% coupon on the 30-year Fannie Mae fixed bond. The green goes up, the value, the rates go down. So this is the last 30 days, kind of a peak in on this one right here. This was about where the lowest rates were, maybe 3.125. We start getting down to 3.25, maybe 3.25, and all of a sudden 3.25, a little bit of a cost. This is a 35-day moving average. And so we basically just crept under the 35-day moving average, which triggered me to lock some loans today because once that happens, we don't know where that bottom is going to go once we get under the moving average under there. So the good thing is, let's see if I can pull this other thing. This was the market for today. So we opened. This was when I was starting to lock some. This right here is when I got a notice. I started locking some loans this morning. I was concerned. And then I said, oh shit, what did I do? And then I locked a loan. So this is kind of but right now we're basically, this is pretty minimal. So this is a 2.5% coupon, and it sells at 103.82, and right now we're down to 103.78. So pretty minimal amount for the day. But you can see, as it refreshes, you can see that over a period of, this was 3 months. So this was when things got all crazy, but rates were down to right here. Rates were about 3.5% just in February, 3.75% right here, maybe in February. And then if you look at the maximum loan, this is right here. You can see this trend where the record. So the higher the value, the lower the rate. So we've kind of in that great trend to be able to lock something. And then there's a 30-day moving average. And then we can see our resistance is kind of anything that once it breaks above this, things start looking good. So as soon as it hit here, we kind of had, this was like a locking point, like it didn't go much higher. Once it gets here at locking point, and then the same on the support level on the bottom side. So if we get down to this green, things start running, and that's why I kind of locked some today. So compared to yesterday, we've lost about an eighth of a point, but see, we're up 5 there. So back to your program here. So this 3 1/8 today was at a cost of closing cost. So that was at actually $3,000 to get us down just to 3 1/8 right there. And then the payment breakdown goes 1984 on that one, 1989 on that one. 89. And then the 3.25 rate. So the 3.25 rate today, I think we lost an eighth of a point on that one. So that one is $878, a quarter of a point. I think we may get that back probably, hopefully tomorrow, depending on what happens with that trend. But that's not too shabby. And then going up to 3.375 on this one here. That one it gives you back $874. So the variables is $31, $16, and this is the lowest. Or this is what you're saving, and that's a no savings, but you're actually getting credit back on this. So it's kind of over a 5-year period. It's not much of a difference. This basically over a 5-year period, the lowest rate is going to save you. Are going to be the most expensive, and then every day over 5 years, you start returning, it starts improving, and then over a 5-year period, this 3.25 is going to be a couple $100 better. But then the 15-year, this is where you kind of where the longevity of a low rate really helps. So the 15-year shows that your total interest in mortgage insurance paid was 136. And then so the lower the better, the lower the number the better here. So you're paying it on the 3.25, you're paying on 15 years, you're paying about $5,000 more, and on the 30-year with the low cost, you're paying about $10,000 more over a 15-year period. So so just hopefully you can this all makes sense to you, and you should have to be able to update your link and be able to see this as well and kind of play with it a little bit. So sorry about the technical difficulties yesterday. hopefully this makes sense, and we're going to plow forward, keep going. I think we should float for the day, but I really we need to kind of say if 3.25 is going to be our magic number without trying to get it in there. If things go sideways, that I want to be able to have that option, because I'm really nervous on some information just came out about the Treasury, but I'm really nervous if this would have continued, we could have seen raise all the way to go to 3.5 overnight versus a 3.25 that we're in now. So, all right, bud, talk to you soon.